One moment, everyone. Just wait a moment. Okay. Okay, perfect. Welcome, everyone, to Mortgage Coaches Training Thursday, and my name is Lytle, and I'll be hosting today's call. First off, I want someone to go ahead and open up the question area and let me know that you can see my screen. It is rent versus own, and also if you can hear me. So if someone could go ahead and open up the question area and let me know that everything sounds and looks okay, I'd appreciate that. Okay, right now, okay, perfect. Thanks, Marcy. Appreciate that. Okay, thanks, Isabel and Kelly. Okay, great. What today's presentation is, what we're going to focus on is the rent versus own presentation. And this is a very unique presentation that you could provide your borrowers, especially those new home buyers who don't quite know how a mortgage works and what the benefits of owning a home and having a mortgage is over rent. So that's what we'll focus on, and this is a very unique presentation that you'll be able to use. So with that, we're going to cover not only the details of each graph, how you'll be able to explain that, really understand those, present it to your borrower, then we'll dive in on how to build this presentation. And if we have enough time during the call, we'll then show you how you can save products, because the rent versus own is also a good report to provide your realtor partners. So if you're having an open house, you can also prepare a rent versus own that goes along with it. And then as you get prospects, it's really easy to copy this rent versus own and create one specifically for the borrower. So with that, what I would like you to do before we dive into the rent versus own report, everyone, I already see a few of you already have your question area open. Please open the question area and ask me any questions along the way. Even if I pass the screen or pass the topic and you still have a question, please put it in the question area. I'll go back and address that for you. Also, I would like to know if you're on an enterprise account, what company are you with? So that way I'd be able to address any type of enterprise type of questions for you. So with that, the rent versus own report. So you can see how it looks very similar to the total cost analysis, but with that, we're comparing rent payments versus mortgage payments. And instead of just comparing monthly payments, the area here, we're showing net monthly payments. And this tends to be a little confusing on how to present it to the borrower, but once you understand it, we go through it, it is a great tool to be able to use and present. So with that, let's go ahead and discuss what we're doing here. So I have a rent column, and then I'm comparing it with 3 loan products. And in this particular case, this is just to be able to show a borrower different loan options, different pricing amounts. So it will show them the different net monthly payments, different write-offs that they can have at either stage. So it will help them determine where they want to go in their purchasing a new home. So with that, I also am just putting 20% down so we could just focus on the report, not really focus by apple to apples and MI. So with that, I want to go ahead and show you the total payment column. So with that, you can see my total rent payment I'm paying is $775. And for my first product, sales price of $100,000, and I have 20% down. So you can see my loan amount is $80,000, and my payment for that is $526. Still less than that rent payment. Now we have a loan amount of $150,000. With that, our sales price of $150,000, we have a loan amount of $120,000, and now our payment is a little bit more than that rent payment that they're paying. So now they're going to say, okay, I'm paying more out of pocket to buy. What's my advantage? So that's what we'll talk about. The third product is the sales price of $200,000. So with this, we have a loan amount of $160,000, and now our payment pretty much increased a couple $100 over that rent payment. So now again, you know, the borrowers, why would I want to spend more money? So this is how you'll be able to explain it to them. You can see that we have a tax benefit line. With that tax benefit line, we're showing the benefit of the standard deduction. So when you talk about, well, does rent have tax deduction, this is just the generic standard deduction that they can receive. You can see that amount is exactly the same for purchasing a loan at $100,000. But the reason for this is because the amount is so low, they didn't qualify for a tax deduction with the mortgage interest. And what they did is just receive the standard deduction. So in a sense, it's the same, but their payment is less than their rent payment. And they're building principal, they're building equity, where they're not doing that with the rent. So next we have the tax benefit. You can see how now you're finally receiving a little bit of a tax benefit here. It's more than you're receiving over the rent and 100,000 K. So we'll dive into that a little bit more and see that. And then you could see how on the sales price of 200,000, how much it's increased. So remember, this tax benefit that we're showing is just the basic deduction that you could take for the interest and MI. With that, they would need to talk to a financial advisor because they'll have different items that they would want to write off too. So there's potentially more write-offs. We're just focusing on the mortgage interest. So with that, the next benefit of owning a home, besides that tax benefit, is principal. That principal is your equity. So you're not paying any money toward principal, so you're not building wealth for the borrower paying rent. Then you could see how every month you're paying $110 when you have a $100,000 sales price down on principal. So each month you're putting money and you're building equity. Then with the sales price of $150, you receive your principal that you're paying is $165, and then with the sales price of $200, you got that $220. So you can see how now they're building wealth through principal, and you'll be able to show that to them. So now what we do is the net monthly payment, and this is where it gets where people get confused, but it's actually quite simple to understand. So the net monthly payment is taking that total benefit, or total payment, excuse me, and then we want to subtract out the benefit to show what the cost is of the loan. So we take that total payment amount, we subtract out that benefit of taxes, and then we subtracted out the principal and that benefit. So the two benefits they receive from owning a home versus renting, and then once we make that calculation, that is the net monthly payment. The amount of money that is the cost of being in that house or apartment. So the cost is $643 for rent. The cost of purchasing a $100,000 loan is $319. When you purchase $150,000, you now have a cost of $479. Remember, this is just applying to interest, taxes, insurance, cost of the loan, money they're not benefiting from, except for owning the home. Then you have that net monthly payment of $639, and that's each month. And with that, this is just numbers that you see, and then we provide this in a graphical format that's easy to understand. So you can see how we have that net monthly payment at $644 in our rent column, and that's what we're comparing against. So with that, we can now see the benefit of $320 comparing against $480 against $640. And remember, this is the net payment. So the highest amount, which is the rent, cost they're not receiving back. You could see how the $200,000 sales price, it's $640. So there's still, $4 saving owning and purchasing a $200,000 house. So again, what this graph I'm showing, if you look at the net monthly payment is $643, we round it and put it at $644. So that is the money that is going directly to rent with no benefit. You're only paying out $320 when you purchase a $100,000 loan, and that is money that you would not receive benefit from. So you can see it's a lot less money than that rent that you're losing. Now that you're going to a sales price of $150, that amount is $480. And with it, just a moment, and with that you can see it's still under the amount of rent that you're throwing away. So they're still saving purchasing a home at $150. Now take a look at the net monthly payment of a $200,000 sales price. So it is the cost of the loan is $640, but the cost of the rent is $644. So it's the same, almost roughly that same cost, but now they're purchasing a $200,000 loan sales price house. And with that, they're also building equity. So this is just focusing on the payment. So not only that, they're building wealth through equity, and we'll dive into that. But let's go look around that more info button. And with that more info button, you could see, let me go ahead and clear out the highlights in here and just put it back to just a few, just a moment. So now you can see in the analysis summary, we provide just a lot of details, real quick details. You got your P&I payment, so you can just see the straight P&I payment across. Then you have your purchase price of the home, the interest rate of your files. We provide the APR, the term, the down payment, so you can see how much money is being applied, and then also an estimate of the cash close. So now let's go ahead, and the one thing I did point out the differences in the graphs. We have those differences in the numbers in the net monthly savings. So the $323 that you're saving between the sales price of $100,000 toward rent, you're saving $164 between the sales price of $150 versus rent, and then only $4.17 between the $200,000 and rent. But again, that's the net monthly payment and doesn't disclose principal. So now let's go ahead and look at the rent versus principal paid over 60 months. So what this shows is how much money is going toward rent, and that is roughly $49,282. So they're paying that each month toward rent, and we're not receiving that money back. So with that, you're building wealth through principal. And in the $100,000 sales price, you were paying down $7,354. So you built a little wealth there in 5 years. And on the 150, it's roughly $11,000, and the sales price of the 200 is $14,000. So you can see how they're building more wealth by paying down their principal. So let's check out that more info button. So again, we show that total dollar amounts that we have in the graphs. You can see it down, how much principal, the tax benefit. We also show that net cost line again. We put the appreciation value in this screen so you can see how it appreciates. And there is a field in Mortgage Coach where you can put the appreciation rate. And we also just provide that loan balance. It provides them a good quick peek at how much they owe at that 60-month period. And lastly, we show how much equity is being built. So we have $43,000, $64,000, and $86,000. And remember, they did put 20% down. And lastly, we have rent versus interest paid over a 15-year period. So with rent over a 15-year period, they're paying roughly $171,000, almost $172,000 in rent, throwing that money away. Compared to the loan amount of $100,000, they're only throwing away in the amount of interest $43,000. $150,000, it's 64, almost $65,000 that's going toward interest. Again, money that's not coming back, just like rent. And then on the $200,000, it's roughly almost $87,000. So you can see, even with that, $171,000. They're saving so much money in that long run of not paying out toward rent and just paying that interest. And again, going into that more info button, We have all those details again, just to provide all those different fields for you. I wanted to point out the real estate value, that property appreciation rate. You can see that rate percentage in the More Info button in the net monthly payment. If you open it up right at the base, it shows that I put in a 3% property appreciation rate. So with that, we went through the whole presentation and explained it. Let me just touch base with the More Info. We didn't dive into this one. This is very similar to the total cost analysis, exact same screens, but we'll do a quick review. You have a payment breakdown. It's a great way of finding your sales price, the P&I payment, and then your monthly costs. See how I do not have any MI? And then with it, you also have on the closing cost tab, you can see that down payment and your LTV. So you can see how I put down that 20%. We also lump sum our costs here, and then we also provide your fee details. And lastly, if you work with the reinvestment strategy screen, this is where we show that principal reduction here, as well as that new freedom point. And if you haven't used the reinvestment strategy, we have great video tutorials on it. You're able to reinvest not only just principal toward the loan amount, but you could go ahead and reinvest MI as well as lump sum payment. So a lot of goodies you have in that reduction payment, the reinvestment strategy. Okay, so now we're going to go ahead and dive into Mortgage Coach, show how this presentation was built. Do you have any questions? I know I talked quite a long ways there explaining the presentation, but it's always good to go diving deep into it, trying to really explain those details. So if you have any questions, please put it in the question area. And now let's go ahead and take a look at how to create this presentation. So I'm in my Mortgage Coach account. And what I have to do, we'll go into my file right here, rent versus owning. If you're creating one with me, go ahead and click on New Client. That starts a rent versus own report as well as that total cost. And you have your new partners. That's where you create the open house presentation. When we go through the new client, I'll show you how to save a template of the product, because you could use that template in your open house presentation, and it would be the exact product. So it really minimizes that input. So we'll show you how to save that template. Okay, so let's dive into the rent versus own. Let's go to my very first screen. And you can see just very few fields that you have to go through in creating this presentation. We'll go through and I'll show you the minimum amount of fields to key in and get through the presentation the fastest you can. So you can see how I'm making this as a marketing report. This way I could just be able to have this in my arsenal. I can have it on my mobile, and if I have a discussion with a new home buyer, I have something I can present them, and then later come back and create a custom presentation for that borrower. So with that, I put it as marketing, but just to show you the difference, if I put individual, it's just providing borrower information here. I want my partner email address to receive email alerts just as I do, so I placed in my partner email address there, but if you don't need it, that can be left empty. Always press go ahead and put a tag name here. And I'm using this for our Thursday QA, so I'm going to go ahead and put in today's date. Advancing the screen, I'm just going to go ahead and put in my goal is for getting a first home. I also want to point out notes here. You can always place notes in here, especially if it's a marketing piece, how you used it. So you know, this file as or whatever you use in the report. But I want to point out that when you advance the screen, those notes carry with you. So you'll always have them, and those notes are unique for you. They do not show on the presentation for your borrower. So they're only in your data screens here. So this is where you put in your information regarding the rent. So I just chose a rent payment of $750 with an annual rent increase of 3%. So this is that 3% increase each year for that appreciation of the home. You don't, or of the apartment, we also have it of the home too. But with the appreciation, If you don't want to show it, that's okay too. Just leave a 0 here or put a number of what that percentage is of your area. I'm saying they have $25 in renter's insurance. If they had any other monthly costs associated to that apartment or renting home, you would go ahead and place that there. Standard deduction. With the standard deduction, you'll see as you're going through and you develop these, a lot of them, because it's the basics, you'll see a set number. But to find that deduction, you could go ahead and click on Find Standard Deduction. This will just walk you through that process. So if I go ahead and put Begin, and I can continue, it's just asking for information. You select the year and continue on. And it's just asking you details about, you know, what your marital status is, how much you, just things like that. So if you follow through here, and at the very end, it will then give you a tax bracket to be able to use, or your standard deduction amount. With that, you go ahead and place that dollar amount here. And if you want me to go through this screen in more complete detail, let me know, and we could do it after the call. This call needs to end about 9:40, 9:45, so I want to make sure I get through the presentation. So go ahead and put it in the chat area if you want me to circle back on the IRS webpage and go through that with you. I'll go ahead and do so at the end of the call. Advancing the screen, now it's your affordability. This is where you put in the tax bracket. I also put in a little additional information for me in the sense of the current annual gross income and as well as the non-mortgage debt payment. What this will provide is the debt-to-income ratio that displays only within your products. It won't show on your presentation. It's just for you to be able to help with that calculation. Now the tax bracket, same thing as the IRS page with the yes, for now, Arthur is asking a question about standard deduction for rent in every state. And some states don't have the rent deduction, some do. I know California does, and it's real, like $100 or something like that. I don't believe that they do take into the rent deduction. What this is the standard deduction that they have for the taxes in general. And if you email us at support@Mortgage Coach Arthur, they do have the breakdown of this, and you'll be able to have that the numbers and how we calculate it. So just email us and you can have that information. Okay, so the tax bracket, what you can do here is go ahead and find the tax bracket. You're welcome, Arthur. And this is an easier one than the standard deduction. Just tax year and decide what they are. So if they're single, you could go ahead and find their loan amount and find their tax bracket. Again, this is an estimate. They would definitely want to be able to talk to a tax advisor, but this is help educating them. So with that, you're not providing financial advice, but you're educating them how a mortgage loan works. I know that's a little tricky topic sometimes. Okay, now moving on to the product. So this is where you build your products. And I just put a label of sales price of $100,000, placed in that loan amount of $100,000, down payment of $20,000, rate and term. Very simple. If you are in enterprise accounts, you might have product templates that you'd want to use. Great tool to be able to have, because this will be able to provide you your defaults such as MI, prepaid interest, and monthly costs. Also, if you're working with any integrations, develop your fee template, because I know like with the Optimal Blue integration, you can bring pricing over, it develops a product for you, and then with 2 clicks, if you develop your template, it's been updated. So it's a really quick way, so definitely learn how to build your product templates. So next screen what we have is our fees. Also want to point out we have our debt to income ratio over off to the right. That's where it go ahead and place it, as well as that LTV percentage. And you notice we're developing our payments as you go through. So you can see the payments directly on the screen. You can see I keyed in 15 days for prepaid interest. And now let's go ahead and look at the closing costs. With that, you have fee templates. If you haven't built it, easiest way is to go ahead and get your fee cost worksheets, and with those, just develop your templates. The fee cost worksheets has your description, your dollar amounts, and if the fee is an APR fee. If you're with an enterprise account and do not see fee templates in your drop-down, they can be developed for you. You can always email us at support@mortgagecoach.com, and we'll assist you in developing branch fee templates. So once you've done building fee templates, you would just go ahead and apply it to the loan, and then move on to our monthly cost screen. Monthly costs, you go ahead and put in your estimates, developing a product template, save it each time so you don't have to key that in. And then if you're doing MI, you would open up that percentage field and go ahead and place that amount in there. Because we're 80% down, we're ignoring that field. Moving on to the reserves, 2 months hazard, 4 months taxes. These can be defaulted with a product template as well as the 12-month premium. So definitely build those out. Now this is where you save your product as a template. So this is how you can develop your all your different products as templates. But this is also a quick way of moving a product from a rent versus own or a TCA, total cost analysis, to an open house presentation, a partner report, because you can't move easily between the two, but this is a great way of saving it as a template, and you can just label it whatever, a quick name, press OK, and then when you go into your open house, you would just put in your purchase price, and then you would just select your product template, and everything else will fill out and be exactly as what's on your rent versus own, as well as your total cost analysis. So that's the one quick way of copying a product from the to client section versus a partner section. Works the same way if you developed an open house presentation first. You would want an rent versus own presentation to go with it. Save them as a template in open house, and then use them through your template drop down, and then pull all that data in. Usually when I'm creating product templates like that, I just use a quick name like OH1, open house product 1 is what that represents. So it just gives you a couple tag names. Okay, so what I did, when you develop a product like this and you already have one created, use your copy from button. Copy from an existing product and then make your necessary adjustments. So if initially I copied from sales price 100, I would then update it to 150. My rate is staying the same. I'm done. I move on. My fees are already calculated for me and copied over, as well as your monthly costs. So there's another way of quickly moving through Mortgage Coach is using that copy from button, which copies a product from one to another. If you're using Optimal Blue or other APIs, a lot of times you don't have an option of different down payments to display. What you could do is always bring a product over, have it in Mortgage Coach, and then once you've updated everything you needed to in that one product, use the copy from, copy it over, change that down payment, change the rate if necessary, and you're done. So it's really easy to move different products with different down payments from an API. So again, change my label, use my copy from button, change my purchase price, and I'm done, moved on. My fees are there, monthly costs are there. So now let's go ahead and continue. If you want to add more products, you can add up to 4. And then now we're in our analysis summary. This is where you could change the short-term number of months as well as the long-term number of months. And then you also have that reinvestment strategy if you wanted to use that. So this is where you could go ahead and place in the different savings you have. You could go ahead and place it here if you want, or reinvest MI, or do one lump sum payments. Again, we have that video asset. If you go to the help and do a search on reinvestment, that video asset will display for you. So I also want to point out at the bottom, so we are displaying rent and comparing it against principal. You also have an option of comparing rent versus a tax benefit. You can see the benefit you're receiving for the tax benefit versus not receiving with rent. Whoops. And then you have a tax benefit analysis. So different items that you can display in that short-term area. So let's go ahead and just keep it on that tax benefit so you can see the difference in the presentation. Now you have the long-term interest in MI. I'm showing total interest in MI. You can also show total net worth, not receiving anything with rent. And on that 200,000 sales price, you have quite a bit of net worth being built up. You also, can check out total principal paid. So you can see how much principal you paid down on the loan and show that to the borrower versus how much they're paying in rent. So let's go ahead and keep it on the total principal page, show you a different graph, talk about those. So, okay, now it's just fine-tuning. Just want to show you in the contact area, you could fill it out, but if you're doing a marketing piece, you can always do little additional phrases in this area. And let me go ahead and show you on the presentation. I'm going to switch screens real quick. You can see at the very top, this is where that information, so rent versus zoning, if I place that in my file here, that's where it would display. Moving to the next screen, we're preparing a rent versus own. Here's our 3 products. If I didn't want to show that 200,000, I could go ahead and leave it off. We'll show you that, and when we move to Edge Live, we'll add it back in. Also want to put in payment notes. Payments, this is a compliance piece. Make sure you put a phrase of payments include estimated taxes and insurance, something simple like that in this payment note area. And you also might want to say, please see financial advisor for more information or something like that in here as well. So payment notes here, and your company could have also placed these notes for you if you're on an enterprise account. So moving on with this rent versus own, we're done. So I can move through the next 3 graphs or hover my mouse over the presentation and pick preview. So you always want to go ahead and put on a quote date. So I had copied this one from January. So let's go ahead and advance this to today's date. I also want to point out the print and save as PDF. Always use the link, and use the link for printing and saving if you need to. Better quality, and plus you always want to use the link because any update you make, the link is live and is updated. If you print or save, you'll always have to send a new copy. So let's check it out. Here's the presentation. And you notice I only have 2 products now. I removed that $200,000 product. We'll add it back in when we work Edge Live. So now you can see the difference in our net monthly payments, still having that great savings, purchasing a home of $100, $150. And now we're showing the tax benefit analysis. So with rent, it's about almost $7,900. Same thing with the tax benefit. Remember, those 2 were equal because we didn't receive enough benefit with that interest write-off. And with the 150 sales price, it's about $8,500. So they only get a little bit more of a tax benefit with this. So we'll also go ahead and check out the 200 sales price when we add that back in. But you remember, it's not just the tax benefit that they're receiving, it's the principal as well. So now let's take a look at rent versus principal. So you got your rent of 171, almost 172,000, but you're also building principal. So in 15 years, you have paid down 27, almost 28, and with the 150, 41. So let's go ahead and dive into that deeper, and you have those figures here. So now let's work with Edge Live a little bit with this. And so what we'll do is go ahead and show how you'll be able to highlight the way I'm highlighting, as well as change data and go ahead and bring up a product that we had hidden. So what I'm going to do, a quick way of getting your link, if you're ever emailing us at support, links are so helpful to have because we could just look at your presentation and get so much detail from that link. So always send it. Quick way of receiving it is just that lower right-hand corner, share. You'll also notice there's an email button now. So if you click on that, you'll be able to quickly email your client. You can see how it pops up the email and provides your link already within. So you would develop that email and be able to send that out to your borrower. We also have email scripting on our support page, so if not quite sure about that, look for scripting, do a search on that in our support center. Let's go ahead, let's make sure I copy this. So now let's go ahead and open up a new tab. I'm pasting the link in this new tab. So if the borrower clicked on the link from your email, it would automatically open just like you're seeing here. Or if they are on the mobile device, it would open on their mobile device. So the first thing they'll see is the disclosure statement. They have to review the disclosure statement and click I understand before they can view the presentation. If they don't click I understand, it won't let them allow to dive deeper into it and view it. So now let me go ahead and pull this down, and I'm going to split my screens for you so you'll be able to take a look at Edge Live and see how that functions. Just one moment. Put this over here. It's a little short, squatty. A little bit more room. Okay. So let me just put them side by side real quick. And the difference between the two, they look basically exactly the same except one item. Center, okay, two items. Clear all button, and with that clear all button, you'll notice there isn't one on the borrower's presentation. But the loan officer's presentation, you have that clear all button, which clears out all your highlights. But you notice it doesn't clear out just the highlights on my presentation, it cleared out my highlights on the borrower's presentation as well. So that's the piece of Edge or Mortgage Coach Live, is to be able to interact with the client in live, real time, and be able to explain the products and then view the presentation on their mobile or the desktop, whatever's comfortable for them. And then I could start highlighting. I could talk to them about a $100,000 sales price. I'm taking my mouse, hovering over the title, and left clicking, and it will highlight the full column. If I press the clear all, if I left click on any single cell, it will also highlight. You'll notice why I'm doing this, it's highlighting on the borrower's copy. So then as you're talking about their total payment of rent and then mortgage payments, you then could go ahead and then start talking about their tax benefit and showing them and guiding them through the numbers. And that's the beauty of Edge Live, is even though you can't be face-to-face sometimes, this is a great way of guiding them through and having them listen while you show and demonstrate. And it's a great educational piece. Principal paid, again, you can highlight those different options. I also want to point out, not just highlighting, you can open the More Info button and drive the presentation with the borrower deeper. You can talk about their payment breakdown. Let me pull that over. You can see the comparisons. You could dive into the closing costs, show them that you have an 80% LTV. You could dive into the fee details. You can see how it opens up, and everything is mimicked what you're doing with on your presentation, on the borrower's presentation. So it's not just being able to guide them verbally and visually, you can also then modify data. So remember at the beginning of the presentation, we had 3 products. I removed one of them while we were in the data fields. So let's go into Mortgage Coach Edge. I'm hovering my mouse over presentation, and I'm choosing the Select Report Jump Out. This is where all my products are, and I want to add that sales price of $200,000. So this way you could build products for your borrower, and even if they only ask 1 or 2 products, you know of a better product, you can hide it. And then you can bring it out, advance the screen for that save, and then if you go back to your presentation, you can see how we've just been oh, this one hasn't, but the borrower has. We've just been updated with the 3rd product. That's how quick it is. So it's always nice to have products in the wings like that and be able to pull them out. You can also, besides that, you could build products while you're talking to the borrower, and they can even watch you build it because the product would show up and they would see the data slowly fill out. You can also, with that, change anything. So in this particular case, I'll show you a change in a loan amount, but really it would be probably different changes you would be making. So again, let's just go into our products. Instead of 200,000, say they only wanted to see 175. And then I want to change my title. Always remember to advance the screen because that triggers the save. Advance the screen, side by side. And we can watch how that dollar amounts will change for that third product. See, it just changed as well as that title name. So you can really work with the borrower, discuss things, make those modifications, and it really speeds up that commitment time because even though it's not face-to-face, you're driving the presentation and really being able to show the differences, and they can see it right then and there. So are there any questions that you may have on the rent versus own presentation? I am going to be wrapping up the call shortly. So please open the question area while I'm going through our house cleaning. So with that, we have our home screen. Just want to show you, if you have a presentation like my marketing, it's really easy to copy. Go to View All. I'm going to go ahead, instead of narrowing down my search, I'm just going to do a search. This brings up all your presentations. And now I'm going to narrow down that search. Okay, didn't bring it down. I think I might have a space. There we go. And you can see in my tagline, remember the friendly name field, I put my date and time in it, or Thursday's training with the date. We always post the date and time, but this will help you identify. So now say I have a borrower that wants that same presentation, just needs little adjustments. Perfect. Just go to Copy Analysis, click on New Client, press OK. Now fill out that information of the borrower, and you'll see all your products are there. So a quick way of creating that product, I'm just going to go ahead and save it as Lori. And now if you look at my home screen, I have that new product. And lastly, if you ever want to make a rent versus own into a total cost analysis, it's rather simple. All you do is click to own, go to presentation, preview, add your quote date. Let's take a look. And now you have a total cost analysis. So now when they go to the next level, they want more information, they're ready to commit. Turn it into a total cost analysis. Now discuss monthly payment savings, sort of take away that benefit and now talk about monthly payment. So you talk about the different savings that they will have. And I actually need to mark it. One other thing you have to mark it as, when you change it to own, I forgot to mark it as a purchase, so it's displaying a current mortgage as a refi. So that's going to go away shortly. And then it'll compare the different monthly payment savings, the short-term savings of unrecoverable costs. So this is the area where, again, it shows the cost, the savings of the unrecoverable costs here. And that if you go into the more info, just to show you, what we do is just total the interest and MI of paid. We subtract out that benefit because remember that's not a cost, so we take that away. And then we add those closing points costs, whatever the cost is to loan. So we add those, and then that's what we compare for the total cost. So these are a savings of the unrecoverable cost. So that's how you can create the two presentations rather quickly, just with that toggle, own and rent. So you can always change those presentations around. And lastly, when we're going out, settings, if you created product templates, this is where they'll be hosted. And this is where you can remove the interest rate. If you created it in a presentation, you wouldn't want that interest rate to be carried forward. So you'd want to remove that and make any other adjustments. And then you have a product template that's already built with your monthly costs, MI if needed. Your closing cost details for that particular product will be there. And then all the different items, prepaid interest, you can do down payments, all those different items will be within that product template. And lastly, clicking on the help button takes you to our support center, and this is where you can do a search for different video assets. We have the search engine right here, so if I typed in reinvestment and do a search, you'll be able to see all the video tutorials we have on the reinvestment strategy. I think you get the idea without my spelling, but you got it. There you go. Also want to let you know, here's our monthly calendar events for more additional training and coaching call archives, and we post all our coaching calls, Tuesday coaching calls, as well as today's call will be also hosted in our coaching call archive. So with that, I'll stick around and we'll be wrapping up our call. Thank you so much for attending and have a wonderful day.